All right, so as you look at this question for manga, we previously looked at the statement of profit or loss. Now we have to make the balance sheet. Right, the balance sheet, the whole concept is the assets must equal to the total liabilities plus capital. All right, the accounting equation, assets equals liability plus capital. So in your balance sheet, the first section is the non-current assets. These are the currents these are the assets you can own for more than a year. All right, so in this question we had office furniture. Right, according to our sheet, the cost is 5 million. Let's go here. Cost is 5 million. Then I recall we also calculated the depreciation for the office furniture. Okay, they told us what was the depreciation. Depreciation is charged on office furniture at 10% per year using the reducing balance method. All right. So let's look at our tabulations for depreciation. Right, so the reducing balance method, this is the formula. Right, unfortunately, my Microsoft Word is not working, so I'm unable to type in new things. So, yes. So the depreciation, it's the cost minus the accumulated depreciation times the rate. Right, from our information here, office furniture accumulated depreciation 1st January 2008, 2 million. All right, so you're going to say 5 million minus 2 million, that is 3 million. 10% of 3 million is 300,000. So if you record this depreciation charge, we charged it in the statement of profit or loss. Now, here in the balance sheet, this 300,000, we're going to add it to this depreciation here, this accumulated depreciation of 2 million, right? Because every year you calculate for depreciation, then you add it because the depreciation always accumulates. As time goes by, the depreciation is accumulating. And as the depreciation accumulates, the net book value of the asset reduces. Because if you remember, depreciation is the loss of value in an asset over time. All right. So that 2 million. Okay, this 2 million here plus the 300,000, all right, you get 2,300,000 as your accumulated depreciation. So to get the net book value of the office furniture, you're going to say 5 million minus 2.3 million, that is 2.7 million. So this is how much the office furniture is worth. Any questions, colleagues? Okay. The next item on our list is our current assets. These are the assets you can own for less than a year. All right. So, and our current assets, we've got our debtors. These are the people who owe us money. Right. Remember, I believe We removed the 1 million earlier on, if I'm not mistaken. Yes, so our balance for our debtors became 19 million. All right. Then we also tabulated our allowance for doubtful debts. This 950,000, you got 5% of 19,000. This 950, which is the allowance for doubtful debts, which is the money we are expecting not to receive, we deduct it from the debtor's balance. So when you say 19 million minus 950,000, you get 18 million 50,000. Are we okay with that, colleagues? Yeah, okay. No, at least it's being recorded. But anyway, okay, all right. Then you can ask why you are not clear. Okay. Colleagues, any questions on this adjustment we've done here for debtors? Okay. Our closing stock, the value of the goods will remain with once the year ends. Our inventory, that's the value of the inventory that remain with 15 million, right? We had a prepayment of 500,000. We include it as part of our current assets, right? The bank balance, 1.2 million. The cash balance, 300,000, right? Then you total up your current assets. Let's get our calculators, please, so that we verify. Okay. It shouldn't look like some of these numbers have just been put there. No, we have to verify these figures. All right. Yes. So you add these 18 million, 50,000, 15 million, 500,000, 1.2 million, and 300,000. Right. Supposed to get 35 million, 50,000. So I'm giving you some time to add. And if there are any questions, you can still pause them now before we total up our assets, then we go to the next section of our balance sheet. So after you get this 35 million 50,000, you add it with this 2 million 700,000. So the total assets are worth 37 million 750,000. So we're done with the first section of the balance sheet, right? Where we tabulate our total assets. All right. The next section is the capital section. All right. 33 million. And you add the profit. This is the profit from the statement of profit or loss. All right. So you add it to the capital. All right. So you're going to say 33 million plus 5,750,000, you're going to get 38,750,000. Right? You add the profit to your capital, then you deduct drawings, because remember, drawings is when the owner of a business takes out money from the business. All right. So the owner took out 6 million from the business. So you say that 8,750,000 minus 6 million. This is our new balance for capital. 32,750,000. After you tabulate your capital, you list out your current liabilities. All right. This is what we owe and we must pay within a year. All right. Liabilities, what we owe. So we are owing. We've got our creditors. These are the people we owe. Owing them 4 million. We also have accrued salaries. If you remember earlier on in the question, all right, we had that accrual of salaries, that 1 million, which we added to the salaries expense. Yes, that same 1 million, that accrual, we include it as our current liability. So you're going to say 4 million plus 1 million, that is 5 million. These are our total liabilities. After you get your total liabilities, then you add your capital, that 2,750,000 plus 5 million. You're going to also get that 7,750,000. So your total assets must equal the liabilities plus the capital.